This is going to be an investing response to my viewing audience on how you can keep calm and invest on in 2018. I'm basically going to break down, give you guys 10 reasons as to why you should stick and stay in this stock market, okay? There's a lot of pessimism going on right now, and a lot of that is provided through the news medias for entertainment. So this is going to really be my response to how to stay grounded, how to stay course, how to stick to your plan and stay invested in this stock market, guys. I'm gonna give you guys 10 reasons as to why I think you should stick and stay in this market in accordance with all known investing principles out there. Guys, welcome to the Independent Investor Channel. My name is Ryan. We're filming from New York City, New York. Number one reason why you should kind of stick and stay in this market is we are on a market uptrend, okay? We are on a historical bull run, okay? And we've had a lot of things that have happened over the last decade to fuel those uptrends. We've had a few mediocre years, to be honest with you, some flat years actually through the last 10 years. But for the most part, the trend has been on an upswing, okay? It really has. And as an investor, these are the types of times you want to sit back, you want to acknowledge, you want to start to safeguard some cash. I've talked to a lot of my clients that I've been helping through my self-direct help in maybe proposing a little bit of throttling back on the funding schedule. But as far as tinkering with your investments, your long-term investments that you have put away for your retirement, the golden rule is never to buck a trend, never to buck a trend, okay? All right, so that's rule number one, is that we are in a confirmed market uptrend, and until something changes to break that, there's really no reason to tinker with your program right now for ill-advised reasons. Number two, guys, is that the tax bill has just provided a stimulus to all the corporate earnings from 35% down to 21%, and the market doesn't know how to interpret it, okay? It is a net positive, okay? But right now, everybody's going through and really trying to understand, you know, companies that are repatriating money, Apple being the flagship driver there, some of the other majors as well, have a lot of money parked overseas, and they're going to be bringing that money back. And that's one of my top two reasons to actually own Apple, along with the services business that they provide. But the tax bill has provided a positive stimulus. And you guys can beat me up all you want as to how politically driven you are about the tax bill. At the end of the day, the tax cut is going to be a stimulus for the economy, and it's going to be a net positive for the stock market. Number three, we are in a global growth revolution right now, okay? We've really never seen the world economy grow at this particular rate. That's why you're seeing the industrial sector and even some of the defense names that are attached to the industrial sector as well as a subsector go up in a wave of momentum with this growth going forward. I've never seen Caterpillar move in this way. Would I invest in Caterpillar right here? No, I wouldn't, okay? But it's one of those stocks that has just been on fire. I remember when Caterpillar just some short time ago was in the low 50s, and I was actually half tempted. This was a couple years ago to pick up Caterpillar. Mistake that I didn't, certainly, but nobody could have foreseen where the industrial growth was going to come from, and I believe that it's global growth that's driving this groundswell of momentum in the industrial sector. Number four, interest rates. Interest rates are still at historical lows. That is one of my top two stimulus to actually derailing this market, is if the Fed follows through and prematurely increases interest rates, then that's probably going to create a shockwave through the stock market, and it's probably going to have a negative impact. But right now, interest rates are at historical lows, all right? Now, number five goes along with interest rates. Number five reason is inflation, all right? Now, the Fed monitors inflation very carefully, and they can adjust monetary policy to keep inflation under control. Inflation is starting to creep up a little bit, all right? But those are the two factors that I believe that could probably send a shockwave through this market if we were going to get some sort of perceived correction or downtrend in the stock market: interest rates and inflation, all right? Number 6, and this is a really important one, and this is the beauty of the Independent Investor channel. As I've said many times, I get to have my voice on this channel, and I try to keep my subscribers up to date and keep them grounded on fundamental investing principles, okay? It has nothing to do with me trying to put a bunch of clickbait onto YouTube and try to get your attention by making you think that I can tell the future, all right? I've got news for you. It doesn't exist. Okay? If you want to go down to the little old lady on the corner and have her read the crystal ball for you, by all means, go ahead, but that stuff is not real, okay? I hate to break it to you, but it's not real. Nobody can tell the future. Now, in regard to the stock market, a historical performance is not a future indicator of future results. That's just a fact, okay? So, yes, I can acknowledge that we have been on a bull market for the last 9 years, okay? We can acknowledge that. That's great. But what does that mean? Does that mean we're eventually going to fall off a cliff? No, it doesn't. Does it mean that we could eventually have a correction? I don't know. I don't know. But anybody that's talking to an audience of people perceiving that somehow, based on the fact that we've had uptrend in the market for the last 9 years, and somehow we're going to just fall off a cliff by nature of just because we've had red, somehow the ball is going to fall into black somehow? I don't understand that. And if you really want to understand that, go ahead and go to Vegas and play roulette. I really could care less, but it really doesn't have any place at all in the investing world. Number 7. Emotional short selling is just that, okay? If we start to get a downtrend in this market and the stock market starts to correct and you want to sell out of everything quickly, what you are doing is you are satisfying a short-term need at the expense of long-term goals. That's what you're doing. All right. And it's going to feel really good when you see that stock go down and you see a great company like Apple adjust back for whatever reason it may be, right? It adjusts back 10% and you want to panic and you want to exit the stock. You're going to feel really good. You're going to feel really good in the very, very short term. Unfortunately, in the midterm to long term, you will suffer. You will suffer by the nature of that decision to actually exit that position early. And that is not a fundamental principle that I teach. I teach fundamental principles in line with staying long on good quality stocks, irregardless of what you're told through the news media or what somebody tells you. The right decision to make all the time is to stay long on these stocks. Number 8 is, if you end up selling that stock in the example that I just gave you guys, you end up exiting the position, right? And the stock goes down 10%. And you're on a dollar cost averaging program, just sit back for a second and think about what you're missing out on when that stock adjusts down 10%. Yes, your money amount will fluctuate, but you're missing out on the dollar cost opportunity to average down and pick up shares of those stock every month if you're doing a true dollar cost average program, which for you guys that don't know, it's basically allocating a certain amount of money to a particular stock portfolio every month. The idea being is that you buy low and you buy high, and over time it averages out, where certain times you're buying low. But if you're continually selling out of a stock because you're scared and you lose your mind, or somebody tells you to be scared in the stock market and you sell everything anticipating a drop in the stock market, you're going to lose in either case, because what's going to happen, and I say this all the time, the stock market is a very humbling place. You're going to think that the stock is going to go down, it's going to rebound the next week, and it's going to go right back up again, and you're going to end up entering back into the stock. Or it is going to go down, and you're going to miss that buy opportunity on a true dollar cost averaging schedule. Number 9. timing is always the wrong way to approach the market. Nobody has the ability to time the market. It's about as cliche as a statement that I can make. It's out there. You've all heard it before. Hopefully you've heard it before. For you guys that are new investors and you're asking me all kinds of questions about, okay, the market's been up, Ryan, now 9 years straight. What do we do? Should we take some profit now? Should we reallocate? Yes, on both of those. If you guys have participated in the stock market and you feel like you guys are up 50% or more in any of your stocks, certainly take some profits out of those accounts. That's fine. Take some profits, leave those profits, and roll them back into another sector that I feel is kind of unloved right now. I've talked about telecom exposure, and what a great opportunity to actually pick up some of those sectors right now with some of your profits, guys. You're playing with house money. It's a beautiful thing. So if you guys are sitting on profits, do not hesitate to go in there and rebalance your portfolio. And if you need to take some profits, go ahead and do that. But keep all that profit within your account. Don't ever take it out and realize and put that profit in your pocket. It's going to impact your compounding effect going forward. That's number 9. No timing the market, all right? It's not allowed on this channel. It's not something that I advocate for, and you will never, ever, ever hear a message come across my channel which alludes to trying to time the market. Comes across a lot of other channels. You will not find that type of activity here because it is not in line with fundamental principles in investing in the stock market. Number 10, and it's probably the most important thing, and is something that I want to drive home. As I start to roll out my project to you guys about portfolio building for self-directed investors, so stay tuned for that, guys. It's going to be really, really special. I'm going to release that through Facebook, and it is going to be free of charge. I thought long and hard about how I was going to release the material, but I think Facebook is probably going to be the best platform to release that material to you guys. And a lot of you guys are sitting back and you're saying, okay, Ryan, I got it. You know, I've reduced the debt. I've got some savings built up, and I've got my self-directed Roth IRA account started. Thank you so much. Now what do we do? All right. This portfolio building strategy is going to answer that for anybody, irregardless of how much investment capital that you have. It's going to depend on your risk tolerance. So stay tuned for that, guys. But the top 10 reason why I feel like you need to keep calm and invest on is to stick to your plan. Stick to your plan, all right? The mariners never got anywhere by embarking on a journey out to sea and zigzagging back and forth at every expense. When they hit rough weather, they dive in and they stay in the cove of safety for weeks at a time. They never did that. They set a course for the horizon, and they knew what their destination was going to be on their horizon. And if you're jockeying with your plans throughout your life, guys, you are not sticking to your plan. And just in closing, this can be one of the easiest and it can be one of the most difficult things that you can possibly do in the investment world. Guys, thank you so much for tuning in to this edition to Keep Calm and Invest On, my top 10 reasons as to why you need to stick and stay and make it pay in this stock market. If this is your first time tuning into the Independent Investor channel, guys, subscribe to the channel and support the channel, guys. I offer my comments and thoughts and expertise in the stock market of 25 years for you guys, and I do it solely for you guys, all right? Leave your comments at the bottom of this video if you guys have any comments or any amplifying information of the topics that I've covered today. Please leave those comments at the bottom and we can start a community discussion. If you know anybody out there that's looking to get involved in the stock market for the first time, share the link with them, guys. That is going to be the structural and fundamental way that I'm going to build this channel. I do not pay for false advertising. I will build this channel through referral and through referral only. Thank you so much for tuning in, guys, and good luck in your investment future.